what was so interesting, among many very interesting things in this unprecedented event, was the turnaround, the pivot by Donald Trump, who 3, 4 weeks ago was still going on. He wanted low gasoline prices. They're great. They're a tax cut. But he came to see this as a national security issue, also an employment issue, and a very important factor in the U.S. economy. And he just jumped in. His first book was called The Art of the Deal, and he prides himself on being a deal maker. I think this must be the biggest and most complex deal he's ever made. And not only was he a deal maker, but he was also something of a divorce mediator, because, of course, a month ago, the OPEC Plus broke up when Saudi Arabia and Russia went their separate ways. So he really worked the phones with the leadership in Saudi Arabia and leadership in Russia. And, he's now he's part of the club for now. But I think it is a response to the current situation.
At 9.7 million barrels a day, or whatever it ends up being, in the early price reaction that we've seen in markets, it does look like investors are still mostly unconvinced that this is going to go far enough to offset the demand destruction that we've seen as a result of the coronavirus and stop the tanks from hitting limit up. How do you see the market reacting, I guess, when we see these cuts eventually starting to take effect, and how is it going to impact prices moving forward?
What this has done is it's bought time. That's what you needed. What it means is you won't hit what they call tank top at the end of April, beginning of May. You push that out. Now, obviously, everything depends upon when life returns back to normal, and no one clearly knows when that will be. But this also addresses a second problem, which we were going to build up such high inventories, 3 times bigger than during the 2014-2016 period. And that would have had continuing pressure on the market for the next couple of years. And as you all have pointed out, this agreement goes 2 years. So it's also meant to manage the inventories downward over that period of time. So what this has done is averted what really would have been a disaster for the oil industry. And I think it does give some stabilization. It does not address the whole problem. Our numbers this quarter is we think demand for the whole quarter is going to be down about 20 million barrels a day. We'll see where we are at when this quarter goes on. But this goes a long way, and the alternative was a pretty steep drop. If I could just add one other thing, 10 days ago you were looking at this and it looked like it was going to be that price was going to head to $10. Now we're talking about is 30 where it's going to be.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.